So when you're getting an FHA loan, there's a few things you need to understand about mortgage insurance, and it's called MIP, Mortgage Insurance Premium. And it's different than your homeowner's insurance. Your homeowner's insurance is for fires, floods, and such. Mortgage insurance is actually an insurance policy that covers the lender in case you default on the loan. It covers the cost in the foreclosure. I know that sounds a little bit scary and you're never gonna go down that path, but it is one of those things that we need to understand, specifically with FHA loans. They actually have two levels of mortgage insurance. They're gonna have monthly mortgage insurance, which is added to your monthly payment, and then you're also gonna have upfront mortgage insurance. Now that upfront mortgage insurance, the good news is you don't have to pay it. You don't have to write a check for it. It actually gets added to your loan. So here's the way that works. Let's say you're gonna do a $100,000 home buy. They charge 1.75% for upfront mortgage insurance. So that's gonna be $1,750 that they're gonna wanna get paid on to do that FHA loan. So what they do is they actually wrap that into your loan. So now your loan, instead of $100,000, your loan is $101,750. So they actually add that to the loan amount. So when you look at your final numbers, don't freak out. You're gonna say, hey, I bought this house for $100,000. Why is my loan amount $101,750? It's because they wrapped in that mortgage insurance. You do have the option to pay it up front if you would like, but most FHA buyers, most buyers in general, don't like to pay that up front. The other level of insurance that you're going to have is a monthly mortgage insurance. And that's gonna be generally around 0.85 or 0.0085. So what I mean by that is, let's say again, it's $100,000. You're gonna times that by 0.0085, in this case giving you $850. Then you're gonna divide that by 12, and that represents the 12 months of the year. Essentially, it comes out to about $70 a month that you're going to be paying for that mortgage insurance. And that's gonna be forever on your loan, that's $70 a month. The upfront, you only pay that one time. And a lot of people ask, well geez, what's the point of FHA? Well, think of it this way. FHA serves a very important category within the home buying process. They're not a mortgage company. They don't actually loan money. In fact, what FHA does is they provide insurance so that lenders are comfortable loaning money. So FHA only requires 3.5% down. And with that, some mortgage companies, they don't want to loan money if you're only putting 3.5% down. They want you to put more down. So FHA steps in and says, hey, look, we're gonna cover the gap here. We're gonna make it to where you're more comfortable with this risk with only 3.5% down. We're gonna make sure that they have an insurance policy in case anything does happen. So when FHA came around, it was a very interesting market in America. Most people had to put 20 to 50% down, and then a lot of their loans would come due in 5 years. And with the founding of FHA, that all changed. It made it to where the average American can really get into a house and be able to become a homeowner, start to build equity and start to build generational wealth for their family. So that's kind of the background with FHA, and that's why this FHA mortgage insurance is so important, both the upfront and that monthly mortgage insurance. And if you have questions on your loan specifically, please reach out to us here at 719 Lending, and that is understanding FHA and mortgage insurance.